All right, welcome back. It's Enda here. It's bullwaves.org. It's 4th of July. So the market is actually closed today. So I thought I'd do a video anyway, seeing as my website has crashed again. I may as well get some content out. It's been worked on at the moment. I don't know why this is happening. Maybe it's a attack. I don't know. I don't know why they bothered, to be honest. But anyway, it's been worked on at the moment, so don't worry. Hopefully, we'll be back for hopefully maybe tonight. Who knows? Or for next week anyway. Um, okay, so I'm going to go through the markets. Happy 4th of July, by the way. Happy Independence Day to all you guys in the States and gals. Um, be safe, be good, be kind, and be safe. Right, so let's tackle the FX market first, and then we'll go into the rest of what's going on. All right, it's been a couple of weeks since I did this. We were away camping with the kids. It's summertime, although you wouldn't know it outside. It's lashing rain. It's a beautiful summer's day. Okay, so we'll start with euro dollar. Let's just go back to the daily again. Now, as usual, I have been looking for, as of late, I've been looking for a wave 2 correction. We haven't got it. I thought we got a reasonable start to it. Maybe it's still an A wave down. So we had a possible wave 1 complete at the previous high here. We had a nice correction. It's not enough to call it a second wave, but we may have a B wave. So at the moment, it's still looking at an expanded flat correction wave 2, with wave C yet to come. But we've kind of pushed and pushed and pushed the ends of this rally in a B wave. At the moment, I think wave B has retraced 162% of wave A, so it's a nice expanded correction if it's an expanded flat. I still think this rally that we've had off the December lows has not been answered in any reasonable way at all yet. So I do believe we are going to see an answer to that rally, and it will be, I think, quite a deep correction, probably down towards 106, 107, somewhere down around there. Although right now you wouldn't know it. So that's the 4 count. You have the wave 1 top here at 115.76, 3 down in A, possible 3 up in B, and then looking for 5 down in wave C, down again towards 107, somewhere around there. The minimum target would be just a break of that wave A low again. So if I can get my crosshairs on, but 110. So a break of 110 would be the minimum. But if we get down there, it would be reasonable to expect somewhere down around 107. That's two previous fourth waves there. If we go to the hourly count, you can see we've got an A wave, an ABC B wave, and then we've got a possible diagonal correction, ending diagonal correction, wave C. Still, 5 main moves in there. It's again up for debate. I know we've had a reversal off the top, although it's reasonably corrective so far. I mean, this could develop into a larger decline. If it does, I have picked out that band of support there between 116.30 and 115.70. So between there, we should, I think, find, or no, excuse me, a band of support between 116.30 and 115.70. And if we break below that level, forgive me, then I think we can pretty much confirm a turn down into wave C of 2. So wave 1 of C should break below that level, down around 115. So let's see if that happens. Here's the daily count in cable, and the long-term count has always been at wave 1 and 2, and we have retraced that wave 2 correction completely and above. So I think we've done enough to call this at least a wave 1 of 3. But there's been no reasonable correction, just like Eurodollar. There's been no reasonable correction in wave 2 just yet. In the wave 1 rally, I was counting an ending diagonal in wave 5 of 1, and we seem to have reversed off that now this week. If you connect the tops of wave 1 and wave 3, the rally just tagged the upper limits of that line and then reversed reasonably hard off that line. So we have an initial move lower yet to be confirmed, but if we do break the previous fourth wave, that'll be 133, then I think wave 2 will be confirmed. Let's see if we can bring that about next week. Dollar yen, again, it was a 1-2 correction. I know that is, that may be, against the grain of what you might expect. But until that's proven wrong, I think that's still the best count here. At the moment, we have, I think, one more move lower within wave C of 2. And I'll show you that in the lower degree count here, or lower degree chart. But we can see a clear A, B, and wave C pattern underway. Wave C of 2 not complete yet. It looks like kind of a triangle that's going on here. I'll show you the 4-hour count here. You can see wave 1, 2, 3, A, B, C, D, and possibly wave E of 4 underway right now, if not complete. I'll show you that in the hourly count. Wave 4 should complete below 146.50, if this is correct. So once we complete that contracting triangle, then we should head lower into wave 5 of C of 2. On the hourly count, you can see here's that triangle pattern. Wave A up, wave B down, 3 up in wave C, 3 down in wave D, and then possibly 3 up in wave E still underway. You can see the upper, what was I saying, 146.50 being the upper limit of that kind of that wave 1 low. So wave 4 should, ideally complete below 146.50. The upper limit of the triangle count comes in at 148 flat. So wave 4 can break, above wave 1. Ideally, it shouldn't, but it can. So we've had a long sideways move to nowhere since April, mid-April. It does fit a triangle. I think we should be drawing to an end in this triangle, and I think one step lower into wave 5 should do the trick on that one. Okay, so let's move on. There's a daily count in the Dow. I've been long waiting and waiting for a B wave top. Obviously, the alternate count for another high in wave 5 could still be possible. God forbid, but anyway, it could still be possible. We are so close to that level now that it's maybe nigh on inevitable that the market does break to a new high. So be it. I can't control what the market wants to do, but I mean, if people want to get, if you want to push into horrible economic times at a high on the market, well then, go ahead and do it. You can see that in the US specifically, housing has already turned in a big way, and that is one of the main economic drivers in the US. So here we are repeating 2007, 2008 all over again. Market pushes to a high, housing has already turned, employment has turned, hours worked already turned, the number of people that are working two jobs is now spiking to all-time highs. You have debt, basically debt destruction, debt deflation, working its way out. And we decide to push the market to a new high again. So, speculation and economics, fundamental economics do not go together as usual. But anyway, so be it. Here we are. I didn't think we'd actually push. I thought that initial turn down in April, March and April was enough to break the back, and we were just rallying in a B wave. But boy, am I wrong on that one. Now the count still holds. The market is off. I know it's only after market today, but the market is off today. We shall see whether that develops into anything next week, and if it does, well then wave 1 of C is on the cards again. So obviously if this is wave 1 of C, then we should retrace back towards about 37,000 in wave 1 of C. Ideally you'd break initially the wave A high that lies at about 40,000. So between 40 and 37,000, wave one of C, and then I think it'd be a larger 5-wave decline in wave C overall. But it hasn't materialized yet. So what can I say? The sleepy summertime is here, and people just algorithmically buying. Now, I was looking at a wave C expanding wedge possibility here. So we have wave 3, possible triangle, wave 4, and then a rally into wave 5. The upper trend line of that wedge has been hit this week and reversed. So yesterday's rally has been reversed today in the aftermarket. We shall see whether that happens. Anything happens on that on Monday. Monday, maybe next week itself might be quite a slow week because it is basically a holiday week in the US. So we'll see. Remain vigilant on this one, although nobody else is vigilant, but I would remain vigilant, either way. And we'll return to it next week. So let's see how that pans out. Okay, let's go on to gold. Here's the daily count in gold. Looking for, we have 3 waves down in wave A, and I think it's just wave A of A of A. That's 3 down in A, 3 up in B, and looking for wave C down. So this would be 3 waves down in wave A of A. At the moment, you can see that's 3 waves down in wave A. At the moment, you see we have 3 down in wave A in green, 3 up in wave B. That's a lower high in wave B. Possible 1-2 pattern to begin wave C. You can see that on the hourly count here. A wedge pattern, leading wedge, wave 1. Maybe ABC up to this week's high in wave 2, although I'm allowing for, it's probably 50-50 on this alternate count as well. So far, the turn off the high has only been in 3 waves. That would favor the alternate count, so it would come down. We would have wave A up, wave B down, and then wave C up towards 3,400 again. A large 3 waves up, and then turn down into wave 3 down. So we'll see how that goes. The larger corrective count is still in play, and there's nothing to turn me off that just. Let's go to the 4-hour count here again. Wave C down in A should bring us back towards 3,000 again, at a minimum, I would imagine. Okay, let's go to crude oil daily count at wave 4 top. So we have a wave 1, 2, 3, 4 again, a type of a wedge, so an ending diagonal or expanded wedge, depending on which way you want to view that. So the expanding wedge would be something like that. So you get an ever-expanding waveform in 5 waves to complete wave 5 of C, and that would project somewhere down below $50 again, maybe as low as $40, depends on how far wave 5 of C goes. The wedge pattern looks quite good. It's not the normal standard ending diagonal pattern would be a contracting wedge, so each following move would be lower in degree than the initial move. So wave 1 would be the largest, wave 3 would be the central in terms of size, and then wave 5 would be the smallest. So you'd have this contracting wedge kind of pattern here. Expanding wedge, wave 5 would be the largest. Here's the 4-hour count. You can see the wave 4 top did not break the previous wave 2. So we still have wave 1, 2, 3, ABC up in wave 4, and that was answered pretty quickly in wave A of 5. And in terms of this count, it'd be wave A of 5. So it depends on how you want to count that, to be honest. On the hourly count, you can see this is wave A down, working on a B wave at the moment. It really depends. It's really up for grabs how far this B wave goes. The action in crude oil is very volatile at the moment. So, we had these blowout rallies in the early June, and that was just retraced immediately, almost, on a dime. So, fundamentally, I would imagine the demand behind the crude market is probably collapsing. So there's nothing to continue a push higher. But that, it's a financial market. And the thing about financial markets is they are disconnected from reality so often. So here we are. We're probably moving in a B wave to a lower high. I'm looking at about between $69, $70 to top out that B wave if we go that high. Wave A was quite quick, kind of allowing a larger time, I suppose, for wave B to unfold. We'll see how this initial move up plays out early next week. If it's just wave A of B, then we're in for a pretty sluggish market over the excuse me, knocking my own glasses off. We're in for a sluggish market over the next couple of weeks. And then a turn down into wave C again should retrace most of whatever we gain in, or all of whatever we gain in wave B. So again, if we go out to the daily count, it'll be a large three-wave move down in wave 5, which should take the rest of the year probably at this rate. Okay, so let's move on. The S&P did make a new high. You can still call this a B wave, but obviously a new high would suggest a wave 5 top as well. So 3 waves down, it might be wave A, or it could be a 4th wave. 3 waves up, it can be still viewed as 3 waves up, and there's partially the action favors a 3 waves up to a new high, which would be a B wave either way. And if we go to the hourly or the 4-hour count here, you can see it. You can see the wave A low back in late March, early April. Forgive me. Initial move higher was in 3 waves, so it was A, B, C, and that would be wave A up, and it topped out at the previous wave A low. So wave A and wave A almost kissed each other there. We had 3 waves down in wave B, and then this long drawn out kind of push to a new high in wave C. So 3, 3, 5, and how you want to count that internal 5 here is up to you. On the hourly count, you can see wave 5 in blue of wave C has been, again, an expanding wedge, shown as an expanding wedge. Market has drifted lower in the aftermarket today. Obviously, the US market is not open today. So, depending on how it goes next week, again, like I said, in the Dow, it's going to be quite likely a slow week next week. You have the previous high here that I had marked was 162% extension of wave A for a top in wave B. So we will see. We will see. I can't comment a whole lot about it. It broke to a new high. What am I going to do? I have been, consistently on the far side of that one. On the far side of that bet, I never thought that we'd break to new high. But then, I always underestimate the kind of, how would you say, the animal spirits in this market, the willingness and ability for people to push themselves over the edge in terms of leverage. And that's where we are right now. Okay, let's move on. The silver market. Overall, the weekly count, we've always been looking higher in a wave C or a wave 3. So that's the weekly count. So that's, that's been the main count for probably a couple of years now. Daily count, you can see actually on the weekly count, the action up into this high has been quite weak, to be honest. Even though there are intermittent rallies that do look quite impulsive, but overall, off of February 22 lows, or sorry, the mid 22 lows. Let's say what month do we get on that? September 22 lows. Forgive me. We have moved higher, but the action itself has been quite subdued, and it's overlapped numerous times, and we haven't even reached anywhere near what you would call a third wave. What you would suspect a third wave would do. And we seem to be kind of languishing within this channel up here. So hard to again, let's say, nail that down as a third wave, or let's say put my hand on my heart and call that a third wave. It's still hard for me to do that. So I have been looking at that B wave high, the ABC up in wave B, and we continue to top out in a B wave. The final move up in wave 5 of wave C of B has been forgive me now, I'll just put this channel up. Long and drawn out. Now, this week we have a possible, over the last few weeks, we've had a pretty much sideways grind. Hasn't been anything happening since the summer began. So I've been calling this a possible series of triangles into one to complete wave 3. And then again, a sideways grind for the last couple of weeks in wave 4. And then maybe this week we've popped to begin wave 5. If that is the correct view here, well, then we should head higher for the next week or so. The way we finish the market or finish the action this week is quite promising. So we could have a third wave of wave 5 coming in next week. If that's the case, then you would immediately look for this 35.80 low of wave 4 to hold. If that breaks, then we are, all bets are off on that one. But for the moment, possibly looking higher into a fifth wave, tracking 5 waves higher in silver over the next few weeks to complete that. So let's see how that pans out. Again, I'm going to say, forgive me, forgive the website. All the members who couldn't log on last night, and as a consolation, I couldn't log on either. So that we're both on the same page on that one until that gets sorted. Hopefully later on today, then we'll post an update for tonight and continue from where we left off next week. All right. I always end the weekly videos with the good news. And the good news, of course, is the good news of the Messiah. This is your holiday weekend. If you've never opened up your Bible, maybe it's a good time to do that. The whole point of the Messiah was to come and to pay the price for sin. We are all sinners. I'm a sinner. Believe me. Today it's 12:40 in the afternoon, and I have sinned probably 100 times or more today. In my mind, in my actions, in my words. There's no way that I could stand before a holy God. Absolutely not. My Creator would, damn me immediately. But for the grace of God in Jesus Christ, God Himself came down, paid the price for my sin, died for that sin, because the soul that sins shall die is what the scriptures say. The soul that sins shall die. And as Paul wrote, the wages of sin is death. The grace of God is eternal life for all who believe. So God came down, He paid the price for sin, and for all those who believe, put their faith in that final propitiation, that final act to pay for the sin of man. The new Adam came and paid for the sin of all of us old Adams, all of us descendants of Adam. And if we put our faith in the Messiah and then walk in fellowship with God and try from there, you will fail, but try at least. Okay, that's the good news. Hopefully I'll be back on tonight with tonight's update. It's a very quiet day today. I don't think there'll be a whole lot of action, but I will round off the week anyway because of last night's failure, let's say, of the website. Okay, I'll see you there, and until then, God bless. Until next week. Have an enjoyable 4th of July weekend, all my brothers and sisters in the US. Be good. Stay safe. Bye-bye.